sort of the message that the market got, Jared, right? He didn't commit on an exact timing, did say that it looks likely that we could see it before the end of the year, did not give a specific timeline. To me, I would think this was all music to your ears, especially the full-throated defense of transitory inflation. What'd you make of it?
Very much as you suggest, but additional music just came from your show, where you heard the expectation that strong job growth should be ongoing. And that's very much our expectation as well. Obviously, that is underscoring the importance of the president's agenda, but most importantly, it's suggesting the job market is going to continue to tighten and deliver critically important benefits to the American people. So that, in tandem with the narrative on inflation, pressures coming largely from supply-constrained, pandemic-induced parts of the economy, is a narrative we, of course, share.
So here's the thing with those supply constraints. The supply crunch is lasting a lot longer than expected. We just had retail earnings this week. We talked to so many CEOs. A number of them are expecting the supply shortages to last for 4 quarters into next year. We hear that from a lot of consumer companies as well. So why is that transitory?
Well, first of all, let me just point out a few numbers. I will get to your very good question about why is that transitory. May, June, July, core PCE inflation, 0.6, 0.5, 0.3. Durable goods, June to July, they went up 1% in June. They went up 0.3%, big deceleration in July. I don't want to overinterpret 1 month, but at least if you look at the core, you certainly see a trend there that very much supports the narrative of the Federal Reserve and ourselves. I think the thing to recognize about transitory, Sarah, you're asking a great question, is that it's going to be different for different things. I mean, lumber is already clearly rolling over and has been for a while. I think we might see used cars rolling over and some of those inflation rates coming down. But we know that because of global supply constraints, semiconductors remain in short supply, and that's going to affect auto inventories. So transitory doesn't just mean one particular date for everything. What it means is that inflation forecasts are widely expected to decelerate next year and decelerate further the year after that. And it's that pattern that's, again, consistent with our own forecast in the midst of an economy that's creating hundreds of thousands of jobs with great wage opportunities for the American working people.
Jared, the Fed now is essentially getting near that point of saying, you know, the economy has enough underlying strength that they can start to remove accommodation. Where does that leave the administration's sense of what is needed from the fiscal side? Obviously, there are these proposals out there. They're being worked through Congress. I mean, to what extent do we think that the economy itself is not necessarily crying out for things like, on top of infrastructure, the further fiscal push?
So the right way to think about that, in my view, and this is not just, you know, politics, this is just core economics, is that that statement about the Fed is correct, and that the economy is not going to need the kind of demand supports that it needed when, of course, you know, we were in the depths of the lockdown. Now we have a strong wind of GDP growth well above trend, expected to continue. We're adding jobs at a pace of over 800,000 per month. What we need to see now is not just getting back to where we were, it's building back better. And the economics of that means we need to get to work on the economy's supply side. We need to make sure that people who wanted to get into the labor market have help paying for elder care and child care, that we improve people's productivity by giving them 2 free years of community college and universal pre-K, an investment in the next generation. Cut taxes for people raising kids, invest in climate, in electric vehicles, capture market share in battery production. Those are the supply side investments that don't just get us back to the other side, but they build it back better once we get there.